Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Josef Schachter, founder of the Schachter Energy Report online at SchachterEnergyReport.ca. He's speaking to us from Calgary. Welcome back to the show, Josef.
My pleasure, Jim. Good to be with you and your listeners again.
Josef, the price of gasoline, they thought we might see some relief by now. Any thoughts on that?
Well, the price of crude's come down from, 120 US a barrel to, we're 109 today. The report today from the EIA was kind of mixed. There was a draw in commercial stocks of 2.8 million. The SPR came down by 7 million. So overall stocks grew by 6.3 million because of the SPR. And the domestic production in the States, with all the active drilling that's going on, rose 100,000 to 12.1 million, heading towards that 12.5, which people think is the target for the end of the year. What was interesting was the motor gasoline demand in the States was up because of the long weekend, and that went up to 8.9 million from 8.5. But jet fuel came down because of all the flights being canceled and the problems of staffing the airlines. So I think we're probably going to see after you get through the July long weekends of July 1st for us and July 4th for the U.S. If the price of crude goes under $100 a barrel, which I think it could because of the slowing economy, both in the States. We saw the adjustment to the real GDP number for Q1 minus 1.6 for the U.S. And with exports having problems because of the rising U.S. dollar, it's likely we're going to see a flat to negative second quarter and probably a very negative third quarter. I think you're going to see prices go below $90 a barrel sometime in the September-October period. And a lot of people, there's a lot of pollsters out there talking to people about their driving intentions during the summer. And because of the extremely high prices, families, and also, lodging is expensive, foods are more expensive, the amount of travel this summer may be way less than people may have thought just a few months ago.
With that in mind, are gasoline retailers an endangered species?
Well, EVs are 5% of the North American car volumes right now, so I think it's a long way away. I think the question is, the politicians, because of the profitability of the refining and marketing side of the energy companies, they're a bullseye on them. Biden's already put a bullseye on the big R&M companies. Canada, not so much yet. But if we start seeing when the Q2 results come out that there's very strong profits on the production side, but very strong comparisons on the refining and marketing side, then the industry is going to be under the radar of politicians, and we'll hear more rhetoric saying that there's price gouging going on. The real thing is we're looking at refineries. They're running them flat out. The data from today showed that the U.S. refineries are running at 95%, up from 94 a week ago and up from 92.9 a year ago. So we're looking at 95 is about as full utilization as you can get. So the refiners are doing it. It's really the fact that there was mergers, there were closures of smaller, less efficient facilities, and the NIMBY issue of not in my backyard for new ones or expansions of refineries. So it's part of the whole governing process where between the environmental restrictions and the NIMBY that there's not sufficient capacity, and after the shutdowns that occurred over the last couple of decades.
Of course, government wants us to stop using gasoline-powered cars and switch to electric, but there's a huge shortage of charging stations for electric, and can the electrical grid taking another 95% of vehicles and power them?
Well, you look what's going on in Germany, because of the concern about the cutoff of oil from Russia and cutbacks of some volumes of natural gas by the Russians to Europe. They're now bringing on coal-fired power plants again. So, if you're thinking about environmental climate change, moves, they're doing the total reverse because they're worried about not having sufficient amount of power. So, I think in North America, we're going to see, more natural gas powered, come on. I think from the gasoline side, I think most of us are, until we see, as you said, the charging station issue resolved by a lot more being put on, and more importantly, the length of miles that you can go or kilometers on a charge. And, if I can't go up from Calgary to Edmonton and back to Calgary on one charge, I'm not going, to buy a car, an EV. So, that's the basic issue is if you want to go to Banff and back, you want to go to Edmonton back, whatever, you have to have sufficient charging capacity, and the technology still hasn't gotten to that level yet.
We'll have more with Josef Schachter right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Josef Schachter. Josef, Alberta has its first budget surplus in 7 years. The Premier says it's due to good fiscal management, or was it just luck that oil prices surged in the last year?
I give them 10% on management and 90% on luck. The price, a movement has been so enormous on the price of oil and natural gas. Royalty revenues were just shockingly 30 billion more than they expected in their original budget before the prices took off. So they got very lucky, but they were also putting, fiscal controls on, and you can hear that from the teachers and from the healthcare unions, where they're saying there's not enough money, that, the classroom sizes are too big, there's not enough, operations being done for people who need hips and knees and, those kinds of operations, and cancer centers are being restricted. So, there's going to have to be an increase at some point in spending because the population is growing in Alberta again. And that's why next year, with the election coming, I think we're going to be sitting in a position where the NDP is going to say, we can pay down some debt, but we're also going to reinvest in education, healthcare, etc., which you're already hearing from Rachel Notley and the NDP. The Conservatives, of course, are going through the cathartic change to find out how they're going to come out of a leadership contest. And, is it going to be the right-wing rural Alberta with their view, or is it going to be urban Alberta, Edmonton, Calgary with a different view? And how do they merge the party to take on Rachel Notley? My guess right now is that it's going to be a tough situation, with Rempel saying she didn't want to leave the federal politics to go provincially. I think that was a warning sign that, that the situation is going to be tough. So if you're looking at, going forward, I think, we may be looking at an election that could be a toss-up or in favor of the NDP, especially if the problems in healthcare and education are still seen as major issues for the population.
It's one of the problems we have. Governments want to be cleaner, I guess, when it comes to energy use, but they haven't thought about the transition from relying on oil and gas to other alternative sources of energy. Have they given it much thought, or do they just plan to hammer us with higher and higher gasoline prices till we literally just surrender and declare bankruptcy?
Well, it's more, you got to think about, what do they say versus what do they do? And our prime minister is off jetting around Africa right now at a Commonwealth conference, and you don't see any leadership by EVs being driving cabinet ministers around, or MPs or MLAs. So to me, this transition is political rhetoric, and yes, the climate is a severe issue, but knowing what's going on in Europe because of the Ukraine-Russia war, Germany is saying we have to go to coal. We have no other choice, and we're not going to be able to move on the climate initiatives we have simply because we need to power and provide cooling or air conditioning power for air conditioning during the summer and heating during the winter. And you've got a lot of countries in Europe now talking about allocating natural gas, which means industry will be cut off from getting some natural gas, and people will be told, wear a sweater at home and lower your temperature by 2 or 3 degrees Celsius. So we're looking at a lot of difficulties here. Part of it related to the industry, the fact that OPEC can't add more production right now and lower prices. Some countries like Nigeria and Libya are having production problems even getting to the quota. Saudi Arabia is still annoyed at the United States because of the way Biden doesn't want to deal with the crown prince there. So OPEC, when they announce next week, how much production they brought on, definitely didn't bring what they said they were going to be of 400 going to 650. So I think that the basic problem is demand destruction is what's going to happen, and that's going to be because of recession. And I think that we're seeing a lot of evidence of that between consumer sentiment, consumer expectations. All the numbers are, I think the University of Michigan consumer sentiment is the lowest it's ever been, and the data has been around for 80 years. It's just showing you how pessimistic people are about the economy. You saw Bed Bath & Beyond today down 25% because sales just fell right off, a cliff because people weren't buying things anymore. And I think the speed of the decline of demand for consumer household items, consumer goods, food, and of course people will focus on that, but they'll be going maybe to lower quality items or more company sponsored brands rather than the normal high price brands that they might have bought before. That I think is all part of it. And if you have a recession that hits worldwide, you could lose 4 to 5 million barrels a day of demand, which is what I believe is going to happen over the next 6 months. That would then change the argument from the bulls talking about supply problems to issues of demand destruction, recession. And I think that's the same thing we had in June, July of 2008. The industry was on tight supply, everything was wonderful, and then of course the financial crisis hit. Well, we're having a financial crisis already. We're having housing problems in the States. China's had the banks in rural China close. Their real estate industry has collapsed. We're seeing housing affordability in North America get to the worst position than it was in 2008. So I think the cathartic of all of these, and you take what's gone on in crypto as just a bit of evidence that when the market loses faith in something, the prices can fall precipitously as they have. 69,000 to below 20,000 now for Bitcoin. I think, we may be surprised at how quickly the recession could be on us, and that would then lower prices. So if you're saying, Joseph, where would the price of, gasoline be in October, November, December? It could be down, 10, 20% from where we are today.
My cousin in Sylvan Lake, who caters to the oil and gas business, had a sign up in his garage. It says, "Dear Lord, please let us have another boom in the oil patch. This time, I promise I will save my money for the next downturn." Have people been doing that, or have they been running up debt again?
I think a lot of people have been running up debt. Remember, house prices are so much higher, and of course mortgage rates have gone up, auto prices have gone up, school prices, insurance, taxes, property taxes. I think that, if you look at the data that, the Globe and Mail's been reporting regularly, Stats Can, savings by Canadians are lower than they've been and near the lowest in the States, even lower than they were before 2008. The issue is the wealth effect. Stock markets up to the beginning of this year were buoyant. Real estate prices were buoyant. People were using that as their ATM, saying, "Oh, my house is worth 20% more than it was." that wealth effect allowed you to spend. Now that we're seeing the prices of real estate roll over, and more importantly, the stock market down. Remember, the Dow was at 37,000, and it was below 30,000, just 2 weeks ago. We're around 31,000 right now. So my view is if we go down to 25,000, which I think is going to happen, remember, starting in a week or two, we start having quarterly earnings for Q2 coming out, and if we have more and more of the Bed Bath and Beyond kind of comments about how things have fallen off, and we did see that in news from Walmart and Target before. If we get very bad numbers on that area, and the semiconductors show a little bit of problems, as we're hearing from some of the forecasts now, you could have technology weaker. Financials could show some problems. We could see consumer debt issues be an issue. Energy is going to show some fabulous numbers, but that's always historic data, not go forward data. And so my view is, we've seen stocks today with the $2 decline, energy stocks down between 6 and 8% on the day, and the TSX Energy down 3%. So, this rollover because of the recession concerns, I think, is going to get more front page, focus. And my expectation is, breaking psychologically 100, which could happen in the next few weeks, will make this a front page news that, hey, oil prices are coming down, recession is here. And then as you break down below 90, I think you're going to see the stocks come down. And I'm waiting, and I expect that we'll be sending out buy signals to our subscribers and with great ideas, potentially to be bought, with stocks down 30 to 50% from where they were just months ago.
Joseph, with natural gas supplies from Russia being choked off to Europe, would that affect prices greatly here?
Well, the issue is that you've got the strong demand where the U.S. is trying to find natural gas to send there. So cargoes that were being sent to Asia, and Asia does need it, but it is slowing down as well. Some of those have been rerouted to Europe because of higher prices than in Asia. But you have that facility in the United States with 2 BCF that had a fire. So, instead of 13, 14 BCF being exported, you have 2 BCF less, and it may be through the end of the year. So U.S. domestic prices have backed off, into the $6 range from the $9 range, and in Canada we're below $6 an MCF. So what's going on in Europe is problematic for them, where the price has gone up to $30, $35 US an MCF, but people are now not using as much, and I think that's going to be the surprise, is demand destruction for natural gas as well as demand destruction for oil. It may be offset somewhat by more coal use. Coal prices have started to rise in Europe and in Asia because of more consumption of it. And this Russian thing is, as we saw from the stupidity of bombing a shopping center, this war could be on for a long, long time. And at some point, people get tired of it and supporting it. And they also run out of ammunition. Europe, is now talking about finding different weapons to send, because the stockpiles of munitions for the weapons they sent are depleted, and the same thing with the U.S. So the question is, it's going to be a race to the bottom, like who runs out of supplies first, or weaponry, Russia or the NATO-supplied Ukraine. And so this thing could be ugly for a long period of time. And if winter of 2022, 2023, if Russia decides at that point to even limit supplies of natural gas even more, prices in Europe will go up higher, which means more allocation, more restriction, more companies forced to close because there isn't enough natural gas, because the decision is we want consumers to have it to heat their homes. That just exacerbates the recession. So, this whole swing from shortage and everybody having robust price forecasts, I think is going to swing significantly over the coming months. And bull markets to bear markets can swing in 6 to 9 months. 1987 was 1 month. In 2008, we went from 147 to below 40. All of it in 8 months. So this thing, peaked, just a few months ago. Could it bottom sometime around the end of the year? Yes. But at significantly lower price than we are today. So we've been suggesting and recommending to our subscribers to going back a few months ago to sell, hold cash, and that there's going to be a fabulous buying opportunity coming later this year. We're focusing them on ideas. We'll start talking to them about the second quarter results when they come out in July and August, so that they can focus on the names they want to own. And my expectation is sometime in the next few months there's going to be a fabulous buying opportunity after a waterfall decline. And, from 37,000 to below 30,000 in the Dow, that's pretty severe already. But if we go to 24, 25,000, that means there's still another significant leg down, and that would then drag energy down. What's interesting, if you go to 2008, 2009, the S&P came down 20% and oil still held up. Once the S&P had gone down below 20% and it was clear there was economic damage, that's when oil capitulated. And I think we're getting very close to that, and a break of 100 would be the capitulation sign that I'd be looking for.
Joseph, thank you so much for chatting with us.
My pleasure as always, Jim.
My guest has been Josef Schachter, founder of the Schachter Energy Report, online at schachterenergyreport.ca. He was speaking to us from Calgary. If you have any questions for Joseph or any of our other guests, you can send them to info@housestreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter at House Street. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of House Street Media Incorporated.